If you'd asked me a year ago, I never would have said that the general public would go out in mass and buy a stock and hold it for an entire fucking year. And if you look at VWAP, everyone's still holding.
Oh, yeah.
You know, and that's in and of itself a phenomenon. And like, I do expect people to hold far longer during this squeeze than they ever would normally. GameStop up higher than ever before, volume lower than ever before. This is buying and holding. DRS kind of accelerates the slope of both of these lines. So if this is buying and holding on its own, then, you know, DRS is just slightly more extreme. So DRS will cause the price to improve faster and the volume to drop faster. Yeah, so I'm not a financial advisor either. I'm not giving anybody one-on-one advice. But if you do have a question, I'll answer. Now, obviously, like, we can't collude. We're an open public forum. Everyone's going to make their own decisions, but I can present the evidence. And if people want to do something with that, there's an opportunity there. I actually think the progressive lack of volume has to do with people not buying fucking options anymore. You can actually see the sentiment shift. When OI on GameStop starts to decrease, so does our price action. Less open interest means less gamma exposure. Not buying options, not being informed about options. They essentially release that pressure from the short hedge funds. And that pressure is so important. If you own a stock long and you have no intention of selling, you should profit off of its price increases. And if you don't want to sell that stock, which obviously no one wants to do on GameStop, then you profit with options. And you can't turn off the buy button on options that you bought 3 months in advance. Everyone's like, even without a short squeeze, this stock will be worth $500 in a couple of years. Well, there you go. Put your money where your mouth is. If you bought 100 shares right now, it'd be $20,000. Or you can buy GameStop at $100 a share at $200 strike for 2024. Retail can squeeze them between options and DRS. If retail buys a shitload of options and we own the float, and then we exercise those options, we're margin calling hedge funds ourselves. We're saying, here, now buy our fucking shares. That's why I think both is so advantageous, right? Because the DRS camp is going to DRS, the options camp is going to option, and the combination of those two likely presents enough illiquidity to drive a squeeze. If we know that they're due for a volatility squeeze based on the fundamental analysis of the market, and retail can create a gamma squeeze, then that is our highest chance of triggering a short squeeze. I think this cycle that we're approaching is likely the highest probability chance at a short squeeze, but I don't see that happening without options. Like, retail doesn't have leverage, and these guys have trillions of dollars. We sit here and we wait for some whale, but the SEC has already told us that there is no whale. What happened in January was us. Leveraged retail is the largest hedge fund. There's no bigger hedge fund than us. And we proved that in January. And now we can prove it again, except this time we know what's going to happen. We have to take into consideration that a lot of people can't just buy $2,000 contracts. I cannot emphasize the importance of this enough. If you guys have any questions, even if you don't like me or don't want to watch me, feel free to ask them.